Randy, always good to talk to you. You think the Fed's going to have to do more on hiking rates?
So clearly they are at a spot where they think they're going to wait a little bit. I think when Governor Waller says we may need to wait, and he's been probably one of the most hawkish people, they're probably likely to wait for this month to see. The real question is, will we start to see a consistent and sustained return to 2% inflation? We've been moving down. As you mentioned, we've been having high productivity growth, which is excellent. That allows wages to grow without as much inflation pressure. Will that high productivity growth be sustained? That's really the question. That's really hard to predict.
Right, and then we have the hotter services number yesterday, the little bit firmer unit labor cost today. I'm suggesting maybe that it's not going to be a straight downward trajectory as maybe the market and the Fed would hope on inflation. What do you think?
Yeah, exactly. Everyone hopes, and our models always say everything is very smooth, but the world never works that way. You can't rely on Vladimir Putin and others in OPEC to make sure that energy prices come down in a consistent way. I think we may see headline inflation bump up here or there because of some tightness in energy markets. The core numbers are sort of flat to starting to come down, and that's really going to have a lot to do with wages and productivity growth.
So you still see November as a toss-up as far as potential action?
For sure. I think that if we continue to see very strong labor market data, if we continue to see the inflation rates sort of around where they are, not coming down any further, particularly on core, I think that's still live. But I think they're starting to get a little bit queasy about, well, there are long and variable lags, but man, it's been a long time, and maybe some of this stuff is going to have some impact. So I think there are more people around that table who've been more hawkish, who are saying, well, we really need to kind of see what's going on. But if the numbers continue to come in really strong, I think they are likely to move in November.
The lag question, it's just hard to know how long it takes, right, and how big of an impact it's going to have, both on inflation and on the economy. It's why I highlighted the Chicago Fed paper that came out on the website saying basically that their forecast model shows that the policy tightening is sufficient. It's already enough to bring inflation back to the target by the middle of 2024. We don't really know, do we, Randy?
Yeah, and we've never known. I mean, people say, oh, gee, the Fed is in uncharted territory and this is all new. Milton Friedman, more than 50 years ago, said monetary policy has impacts with long and variable lags. And that has been the case for the last 5 decades. This is nothing new, although it does seem like the lags are a bit longer. I think part of that is because usually interest rates have a very big impact on people's ability to pay their mortgages. But with everybody moving to fixed rate mortgages and refinancing into sub 3% mortgages, as the Fed raised rates, it had impacts on fewer people. That's going to have more impact down the line, but I think it had a slower impact than normal because of that.
As someone who's been inside the room, Randy, and knows what these conversations are like and the dynamics, what is your read right now about who has the upper hand, the hawks or the dove? Because we know there's kind of a split at the Fed right now. And I feel like the hawks had it for a while and Powell was siding with them, but I'm not so sure right now.
I think that's right. I think that, well, as I mentioned, Governor Waller, who has been one of the most hawkish, has said, well, maybe we can sort of be a bit cautious and consider the data. So I think many of the more hawkish people are thinking, well, we've done a lot. There are some signs that the labor market might be softening a bit. Let's kind of reassess. But they're going to be really alert to this because they don't want inflation to take off again. This is what happened in the late 1970s, early 1980s, when the Fed said, we got inflation under control, let's bring rates down. And then inflation took off, and they had to bring rates to double-digit levels. The last thing they want to do is bring rates to 6, 8, 10%. And so they're going to err on the side of being a little bit tougher now to make sure that they've bought insurance against that outcome.
Okay, I'm going to pin you down here finally. Next move from the Fed, in your bet, and I know there's a lot of variables, is it a hike or is it a cut?
I'd say given the data that we have now, it's more likely to be a hike, but I'd say the most likely outcome is no change for quite a while. and then eventually a cut. But given the strong data, it might be an increase before the end of the year.